It's Thursday, the 25th of May, and the long weekend approaches for many countries. The US is closed on Monday, so let me just share my screen. Take screen. I want to share that. There we go. Let me just start with a stock. Nvidia yesterday. I'm sure you're all probably aware. I don't know if you are. I'm saying you are. Nvidia, very strong earnings, but more importantly, the outlook for the coming quarter and the coming quarters was very, very strong. So shares this morning US time. Zoom that up a bit. There we are. That's a bit better. They're trading around this 388 level, so all the way up here from closing down here, or closed here yesterday. So it's been trending higher for a few days anyway. 305 yesterday into close, but 388 up 29% ahead of the US Open. So watch that later on. We'll have a look at that if we're still here in an hour. Obviously, it's big data today as well. We have there we go. We got the weekly claims coming through as I speak. The continuing claims came down last week to 245,000 and 265,000 the week before. So it looked like they were edging up, but they're in this 250, 260 range, which is more or less normal economic cycle for the US economy. 250,000 weekly claims. The continuing claims and the 4-week average as well. We'll have a look at that in a minute. Also, we got the PCE data as well as the second reading of the GDP, and that's coming healthier than expected, coming at 1.4% annualized, 4.2% for the quarter. So it's better than expected. So the robustness of the US economy continues. This will probably give another lift to the dollar because the arguments of the pause in June might start to come under pressure again, given that the economy is doing okay. Obviously, the caveat of this is the second reading, and it's backward looking. It's the first quarter, and we're already at the end of May. So we'll see how all that pans out. Interestingly, can you see that one's come through as well now? The 5% come through for the consumption expenditures as well. So spending's up. The price index is tomorrow, so see again what that looks like. But that's a positive, strong set of US jobs data. And finally, now you can see here the initial claims has come through again. So again, it's slipped again to under 230,000. And so we've got a hot jobs market, a tight jobs market, consumers still spending. Those services PMIs yesterday were really quite positive at 55.1, I think it was, wasn't it? So this is, the consumer, as ever in America, is holding up the economy or continues to put its hand in his pocket or put their hand in their pocket, and businesses are benefiting from that. So that's a good set of data from the US here. The Conzi is asking if we can have a look at the S&P 500. So let's have a look at, the US 30. Let me just, let me find my profiles. Let's go trading the let's look at these white charts. I got quite used to these white charts yesterday. I don't know what you guys think, but let's look at these white charts. Good afternoon, my friend. I'm afraid I can't. I'm assuming is that Arabic? I can't read Arabic. I'm sorry, but thank you for being here. The Ganzi, for Ganzi, S&P, US 500. So the USA. The one I've got here is actually a black background one, but it doesn't matter. Again, I'm not sure what time frame you're interested in this, the Kanzi, but we're down here. This is we were down. We slipped on Monday a tad. We're under 33,300. We were down Tuesday. We were down yesterday significantly under the 33,000. We closed the day down here at 32,745, which is where we more or less trade at the moment, but that is trending lower. The 4-hour will be just as strong. There's that big trend lower here from that candle there, from this sort of rally here to this 33,600. It's rejected 33,300. There's been the break point, and that's continuing to move down. We go back to the daily time frame. Can you hear me all right, by the way? My microphone's just in front of me here. It's not on directly in front of him. I thought you can hear me. Tashina, good morning. Hope you're well. this morning. Anything you want to have a look at, please, again, stick it in the box. So here, as far as the daily's concerned, Candy, we're continuing to move down. So we're into our third relatively strong day to the downside here. So we're at 32,725 at the moment. Here you can see on the daily time frame, see how the signal line has been declining for most of from that peak there on the MACD, the peak from early May, and we've sort of been declining ever since from that peak. Sorry, peak not early May, late April, early May, and it's been moving down ever since. We had a significant rebound in early May, but we've moved down since. So we're moving down 32,750, and you can see as we went up on the daily time frame. So our support really was down here. This is taken us back. Oh, I can't see that blue line. So I'm going to change that line on there to a yellow one so you can see it. And we got a big tick line. So the big support here for March took us all the way down to 31,800. So we breached the 32,000 level. So that's a big target level if this trend is going to continue. It did on the way up. Is it going to do on the way down? Well, where's our next resistance level? Well, you would say it's sort of through here. You can see that this. Oops, sorry, let me get my. Oh, it's because that's. Sorry. So if we look to the left, you can see, horizontal. Where's the horizontal support? Well, there was a big candle there, wasn't there, on the way up there on at the end of March as we were moving up. So we broke that low yesterday. So we're under there currently. So the next support is this low here, or this pivot area down there at 32,600. So we've been in to test that already, this pivot area here. And then the next pivot low below that is this big area down, or not the next one, but the big one is this one here we talked about before, 31,800. So we got that level there. Let me just put that on as well. So there's that pivot there, which we're going in to test, aren't we? 32,600. And then there's a lot of fresh air because we've just sort of drifted lower, haven't we? There's a little bit of support at the top of that candle cluster there. See that? Top of that 5 day sideways action here, 3, 4, 5, 6, 7 day sideways action, quite significant. It was a support area, and that sits at 32,250. So there are your three levels you're looking at to the downside from where we are now for Kanzi on that end of day basis. Okay, I don't know if you're looking at that time frame, but that's the movement down. If this is going to reverse and get back into this channel, you can see there's a bit of a channel here, isn't there? With that top at 33,600, the support here at 33,000. We do need to get back into the channel, and then we need to break 33,300. So that's our resistance area to the upside from where we are now. That one, and then the top of the channel there at 33,600. So they're the three resistances. There are three support areas. The trend is going down. So if you're going to trade this intraday, be aware that the daily trend is down. The 4 hour trend is down. You can see that nice and clearly there. The 1 hour trend, is down as we just saw there from 3-4 days down now. And again, I don't know if you're trading that in any lower time frames, but we're moving down. Find a bit of support here on the hourly. The MACD has turned up a wee bit. The RSI has come out of being oversold. It's starting to rise up a wee bit, but again, here intraday, you'd want the Dow to breach that key 21-hour moving average. That's key for me. 32,790 or 32,800. Okay, so Tanisha, good morning. Hope you're well. Hope the weather's good and things are good with you in Jamaica. Anything you want to have a look at? Let me know. Elijah, good afternoon. Hope you're well, sir, wherever you are in the world. I'm saying good afternoon. It could be good morning. Could be good evening. I don't know where you are. I've made that ridiculous assumption that it's good afternoon for you. So forgive me for that. Right, if you're just joining me, let me just have a quick recap of the data today. So it's been a very strong dollar. Actually, we didn't actually. Let's have a look at the dollar first, shall we? It's very strong dollar positive, or it should be dollar positive. I'm saying it should be dollar positive. Look at the euro. So euro here. This is the 30-minute chart on the euro today. Let me zoom that in a wee bit. and it's been descending again, a bit like that stock market, because the dollar's been strong. Stocks are down, yields are up. Euro moving down, so euro's at 107.20 at the moment. So big down candle here. This is only the 30-minute candle. We've got the 1 hour candle. See that the downtrend has been very much in set. 110, 109, 108's been breached, and we're at 107.20 at the moment. So that trend is very much set, as you can see. That 20 hour or 21 hour moving average, that green line there. I mean, we've been moving down for days, haven't we? So 107.20. It is dollar positive, the data. Let me just go back to the data. So if you're just joining us, the data was dollar positive. Initial claims have come in tight again, 229,000, nearly 20,000 better than expected. Last week's was also revised down 20,000 from 242,000 to 225,000. That remains a very, very tight US jobs market. As I was saying before the data came out, 250, 260 is a bit sort of not a bit more of a normalized area. 220, 230, tight jobs market. Anything under 200,000 a week is very tight jobs market, and that's where we are. So let's see what non-farm payroll tells us next month. Next Friday it is, isn't it? Unemployment expected to tick lower. Tick up by one tick to I think 3.5%. But we'll see what how these weekly numbers impact it. GDP better than expected for the second reading. They call it the preliminary reading, but it's actually the second reading. It is backward looking because it's about the first quarter, but that's more positive than it was when it first came out. So that's a good sign for the US economy. The annualized number here, 1.3% from 1.1%. Another great positive US number for the bulls. And the core spending is higher than expected as well, 5%. So that's going to add noise to the argument that people like Bullard and Kashkari that the Fed isn't finished. They do need to raise rates. Some were talking to the 6% level, but certainly at least another 25 basis points. It might not be in June, but it could be 25, could be another 50 basis points, as inflation remains very, very sticky. And that strong services PMI yesterday sort of added to that argument as well. I'd argue as well. Demi is saying, nice program. Oh, thank you, my friend. Serene, good morning. So I guess you must be in I don't know, in the Caribbean, in Latin America somewhere. Gold says, Surin. Gold, everybody's favorite. It's been all over the place. It was until 1980 yesterday, didn't it? But it's certainly been all over the place recently. If I zoom this in, this is the hourly chart. But again, the stronger dollar over the last week or so, or longer than that, the second half of May, dollar index has been rallying from 100, and it was under 101. It was about 100.87, and we went to 104 earlier. We'll have a look at that, where that is at the moment. But gold is declining on that positive data for the dollar that's just come out. So where are we? We're at 1941. So interestingly, we're under the key 1950 level. It's not very clear on this chart, is it? But there's the key 19. Let me use a different chart. Just excuse me a minute. I'm going to go to a black background chart. Serene, hope you don't mind. There's a bit more detail on it for me. Gold, here we are. So the yellow dotted line here is at 1950 zone, which we tested here on the 18th. We tested again here on Tuesday. We got toward it a bit yesterday and again on Friday, but we've breached it so far today. So big down candle on that data. We're at 1940 now. If we go up to the daily time frame on this chart, you can see that's very much set. It's down. It's been short from the gold market's been short here on an end of day basis from the 16th of May, and we're now that's how many bars are we in? That 1, 2, 3, 4, 5, 6, 7, 8. We're into our 8th day lower at 1940. Where's the next big support area? Well, it comes in at the 1920, 22 zone. This blue line here. That's your next big support, which again corresponds with the bottom of that candle, the top of those candles, and the bottom of that support, that resistance area initially here in January. Support at the end of January. It didn't hold, and we moved down from there. But 1922 is the next big line. So we're still $18 above that, but it's trending lower on a daily basis. On the daily basis, the 4-hour has been choppy, certainly, but it's tested into 1950, bounced off it, tested it, bounced off it, and now we've breached it currently. Obviously, we can't make a decision as a 4-hour trader on the current candle because it's still far from complete. This candle here looks pretty positive, looks pretty significant at the moment, but anything could happen yet. It's still got well, I'm saying still got, it's only got 15 minutes left, so that's a big break of a key level that might trigger other systems, other strategies. But two big candles out of the last 8 candles, and they were both negative. 3 big candles out of the last 12 candles, one was positive, 2 were negative, and the 2 negative ones were much bigger than the up candle, wasn't it? So even if we go back all the way to that one, the 2 big candles as big as that big up candle there back on the 19th of May. So these, I mean, it's not an absolute rule, but trade what you see. The size of the body of the candle matters. If you've got a big bodied candle in one direction, markets tend to follow through, like we did there, moving down, like we didn't there, did we? So that was perhaps a sign of weakness. Ran into the 21 EMA and then fell, but didn't want to go lower at that point. Rallied up again, but it was smaller than the previous one. So again, the story's starting to be set. The rally up was less candles than this one here. Rally that big break here. So many, technical traders might have gone short here on the 20 or yesterday on that 4 o'clock candle, but here the 12 o'clock candle today is just completing. Another 15 minutes to go, and it's looking fairly bearish, isn't it? To the downside, under 1950. So gold looks pretty bearish around. If you want a more detailed analysis on lower time frames, please let me know. Neo Reps, I like these questions. Whoever you are, Neo Reps. What's your opinion on Broadcom Inc. with the deal done with Apple this week? Well, it's multi-billion-dollar deal, wasn't it? It's Apple's own chips as well. Obviously, the chips are very much in focus. I said right at the beginning, NVIDIA up a huge 29% the last time I looked pre-market on those stellar earnings. Let me just bring that up. On those stellar earnings from last night, and the outlook, basically, big, strong sales pipeline for NVIDIA. So it'll be interesting to see how they open in 45 minutes. Could be a huge move. I was reading on, I think it was on Bloomberg, talking about it could be the biggest single day move of any stock today, but it might be getting a bit carried away. But anyway, NVIDIA, if you have a look at their chart, they've been all over the place. We had this big share split a few years ago. Actually, let's find the chart. And I think it's here. It should be here. And well, certainly one to watch. But so obviously it's all related. Broadcom being a big supplier for Apple for many years. Apple, obviously the world's biggest company, so it's good for both parties. Apple were down on the news initially. Broadcom were up a tad yesterday when it broke. But yeah, it has probably more legs to run. So let me just move me down there. And this is the NVIDIA chart from the daily since the share split. There's there where we closed yesterday, 305. I say last time I looked on the pre-market, shares were running at 388, around about 29% higher. We'll see where they actually open. But if I zoom this in, you can see the big share split. So we had a very, very strong post-pandemic rally all the way to 814 here. Share split here in the summer of 2021 brought us back down to the $200 level. We bounced a wee bit off that to the 350. So that was a key resistance, that 350 level, and it obviously still is, but it looks like we're going to burst through that today. Since then, we've been tracking lower as the pandemic, the frenzy has come off, worry over chip stocks, and we got as low as I think I didn't mark it on here. No, we got as low as 116 here towards the end of last year, but we've rallied since then. It's been a very, very strong year, breaching 150, breaching 200, and now over 300. And I say it looks like 400 might get tested, if not today, certainly just follow through buying from that news yesterday. We'll see. We could breach that quite significantly as well. So NVIDIA very much in focus. As far as Apple, and I haven't got Broadcom here, but I'm sure I've got Apple here somewhere. Neo Reps. It's my Apple stock. I've got all sorts of Apple charts. These are Heikin-Ashi candles, so they're not they look like normal candles, but they're not. But anyway, blue is positive. We've been down the last couple of days, but this is still trending very, very strong, as you can see, for 2023. Some of the big tech stocks, as many are saying, holding up the markets, but trade what you see, not what you think. And that is still rallying up. This is the 50 or the 49 exponential moving average, and the brown line here, the gold line, is the 13 period exponential moving average. They last crossed back here at the end of January, at the end of a retracing a very steep decline during December, and we've been long from most of 2023. 150 was a key line in the sand. 155 was also a key line in the sand. So we're 160, 165, 170, and we've also popped, I should say, 175. We'll see how that continues to move. But on your comment there, Neo Reps, obviously they've been down the last couple of days on that news breaking. So see how it goes. But it's all positive for the chip industry after lots of negative spin. Jamil, good afternoon. Please, can I learn where you can watch what's this here, please? How can I learn this HFM market trade? Go to our website, Jeremy. Come to our webinars. Watch these live events as well. Understand how the market moves, technical analysis, fundamental analysis. Let me just show you the website. So if you come to hfm.com, we've just relaunched the website. We've reduced the number of tabs up here on the first page. So all the education, all the tools to get you going sits here under the tools and education tab, unsurprisingly. So they're the tools. Let's ignore the tools for now. So getting started, you want some videos, some online training, some ebooks to download. It's all in here. Live webinars, recorded webinars are all in here. So get started on the training course. Read our analysis, which we write and report on every day. Obviously, market news continues to churn every day in the calendar, if you're going to trade intraday. But find something that works for you. Find a strategy that works for you. Many, many strategies are successful. Some of them more successful than others, but most of them are good enough. Too many people spend too long trying to find, or chopping from one strategy to another. This is a very, very simple crossing moving average trend following strategy. So when markets are going up or down, like they are here, down, up, down, up, down, up, it's great. But when it's going sideways, the moving averages tend to be horizontal, and they're no good. You want them at an angle. You want to be above them or below them, depending whether you're long or short. But this is a trending market here on this particular asset. This happens to be Apple on a daily basis, and it's moving up. But do get onto our website, Jamil. Come to our webinars, watch the videos, download the ebooks, and keep in contact with us. Support@hfm.com. We're here to help you. Okay, the very best of luck, my friend. Good day. Euro dollar says Dapo. Well, we just had a look at that before you perhaps turned up Dapo, but it's down. 107 has been breached. If we look at, let's use this white background again. I'm not quite attached to this white background. I haven't used black background for years. So here's Euro Dapo. What do you want to know, my friend? It's going down, isn't it? It's with a sideways channel here a wee bit. This is the 1 hour chart. These are days, these dotted lines here. You can see we've been going down, haven't we? That's gold. Sorry, that's not the euro. Excuse me a minute. I thought the euro did look like that, but it's actually come back. It's still moving down. It's the 1 hour chart for the euro. Sorry, let's zoom that in again. Same thing. The dollar's been strong. During May, we've given up 110. We got within a smidge of 111, didn't we, at the beginning of the month? But we've been moving lower ever since. We traded or we biased below this green line. This is the 21 hour moving average, and most of the time we've been below this green line. We've been biased to the downside. So short trades on this 1 hour time frame. Short yesterday into close. We closed here at 107.50, right on 107.50, tested it throughout the day, couldn't get away from it, couldn't get over 108, so we had a 50 pip range yesterday, sideways, and then we breached under it in early trades this morning, and we continue to move lower. On 107.20 is where we sit at the moment, so we're 20 pips north of 107, a big round number, but you can see the volume here on the US data. It's negative. The candle is closing in 5 minutes, the 3 to 4 hour candle. It's a big candle. It's engulfed all the previous action of the day, which you would expect because the data, this is the key data of the day, and it's dollar positive. So euro under the cosh. Let me just show you the, I don't know if I've got the dollar index here, but let me show you the dollar. Yeah, the dollar index here for May. This is the daily time frame, guys, for the dollar index. Remember what the dollar index is. It's created from 6 other pairs. So there's the euro, there's the Swiss crown, there's sterling, there's yen, there's CAD in there. So there's 6 other currencies in there. But the euro accounts for about 50% of the weighting of this index. So it's just like any other index, like the NASDAQ or the Dow. You can trade it like that. But as you can see here, at the beginning of May, we were bumping along, or during April and March, we were bumping lower. The dollar was weaker. We're into 101.00. Here at the beginning of May, let me zoom this up now, we went as low as 188, I think, or 100.88 was the low, intraday low here. So 101 was the support area here. We didn't want to go any lower. And then the big breakout day, it's this big candle here. So again, remember what I said about the size of the candle matters. Regardless of the time frame that you're trading, the size of the candle matters. So we had a big breakout candle here on the 11th of May, and it hasn't looked back since then, has it? So it's broken out here. It followed through the following day, creating new proper highs for May, new highs for here on the 12th of May. We've had new highs for May, we've had new highs for April, and we were off and running, and we followed through since. So we're now through 101, through 102, through 103, and even through 104 today. So continuing to rally higher. We're quite extended from the 20-day moving average here. There's quite a big white gap there, which obviously it's suggesting it's a bit overstretched. The stochastic here you can see is in its overbought area. The D and the K line have crossed. Look like they're coming down, but that hasn't happened. We've continued to move high. So 104. Obviously, next up in round number terms is 105, but that's still a bit of a stretch from there. But dollar's had a good, a long month May has been, but certainly the second half has been very positive for the dollar, and that's reflected in that euro chart as well. So dollar index strong. Just going back to the euro DAPOs you asked for, this is on the 1 hour time frame. The 4 hour, trending just as well to the downside. Let's go the other way. If you got the 5 minute chart, obviously a bit more choppy, but again, it's still biased down, isn't it? This was yesterday. Remember that 10. That's the beginning of the day. 107 gave it up, down. Bit of a rally on some of the data this morning. Fell again. Created a low for the day here, didn't we? Yeah, that was the low for the day. Sorry, you can't see that's yellow. Low for the day here this morning. Change the color of that one. Sorry. Low for the day. I like it in that color. It was down here at 107.13. We bounced off it a wee bit, but couldn't start to move up. We've got a resistance through there, 107.38. See that? And then big down candle as the data broke there at 3:30. See, that's the 5 minute chart for the euro. That was the impact of the data. It was dollar positive, euro negative, and you would expect the low of the day, which we published or we printed here at 10:50, 10:55 this morning, to be tested again. Perhaps doesn't seem to want to get there at the moment. Some strong wicks, but there's rejection here of higher prices here. But you see the size of the volume there; it's dying off a wee bit now, obviously, as the data's come through. But it's is that going to print a new low of the day? we're still half an hour away from the cash open. So there we go. It's biased to the downside, my friends. Be careful to try and catch the bottom. But 107.13 certainly is going to be tested, I would argue. But what do I know? Draco, good morning to you as well, my friend. I guess somewhere now you've just woken up. What are your thoughts on the US 100? Well, stocks were under the cosh overall this week. Nasdaq is not immune. Nasdaq obviously has been a bit of an outlier simply because the impact of an Nvidia. I don't know if you were here before. We were talking about Nvidia has lifted. The whole market fell yesterday, but the futures market for the Nasdaq was up nearly 1.4%. Why can I find my Nasdaq chart here? I don't know if I've got it here. I must have it here. Should have it here. US 100. Can't see it. There it is. I knew it was here. So this is the last couple of days. So we were down on a Tuesday. Lots of volume here as the market. Obviously, this is the 5-minute chart. Remember, guys, but you can see the volume. See how peaky it is as the actual cash market's open. So this is the cash session in the US. This is a cash session in the US. See how big the volume is. So obviously we haven't opened yet, but it's been a relatively strong day. A really positive day. We're at the high we're back to where we were on Tuesday, aren't we? Up here at 13,930. So that feels like 14,000 get tested today. If that continues to track high, there's 14. Put that 14,000 in there as a big round. But that was a big blue line. I use the orange-red ones as like the highs of the pre-market, and but I tend to put thick lines for round numbers like 14,000, 14,050 and stuff like that. So 14,000 is going on that chart. Again, it's just my preference, my habit. 14K, big round number. Lots of people have targets and stop losses around there. And when I say people, I mean everybody from individual traders, retail traders like ourselves, to big institutions. So round numbers are key. Don't think they're not. But again, here, Draco, I don't know how you're trading this, what time frame you're trading us, but that 5-minute chart is positive. That 15-minute chart is also positive today. There's that big leap here as the data was the Nvidia data lifted things technically into the close, having had a down day. But you can see you can see here the volumes are ticking up ahead of the actual open. Big spike here. There you can see a bit better there. You can see the 430 volume spike, and then volume tends to die down during the day. So the opening session can be key. So 13,935 at the moment. So that 15-minute chart is positive. It looks a bit overstretched. The stochastic is way into its bought zone, but it's still going up. So be careful. It might reverse quite aggressively. That's the thing with stochastics; it can turn around very quickly. But it's still buy. Look, it's still buy. See, the highs are getting, even here on this the K and the D line here. The highs are getting lower. Sorry, the lows are getting higher, and the highs are getting higher as well. So it's it's an oscillator, but it's trending. It's going up. Don't fight the trend. If we go up to a higher time frame, you see what a big bang we had into close on that final hour candle. That wasn't really a tradable one, but sideways, and then it's broken out again. It's a bit extended. You see how the stochastic is stretched here. It's extended away from the 21 EMA, but don't worry about that too much. See, it was extended away from the 21 moving average over the last couple of days, but it moved down quite nicely into 13,550 area, and there we are. We're testing. There we are. There's 14,000 just up there. So it's trending high today. Decol. I don't know what time frame you're trading it, but daily remains positive. There we are. You see it trending up nicely during March, April, and May. Nasdaq, the wider composite Nasdaq and the Nasdaq 100 has continued to trade higher. So 14,000, next big line in the sand. When you zoom this chart in, zoom it out, not in, we can see where 14,000 sits and the significance of things. Well, the previous pivot area was a bit lower than that. It was at 13,600, where we've been sort of struggling to get over. That took us back to that high of July 2022. 14,000 was last touched way back here in April 2022. So we're over a year. We're pushing new 13-month highs here for the Nasdaq. Many people are pointing out the very, very high valuations on particularly some of the tech stocks, but the trend keeps going up, doesn't it? There's an old adage that says, sell in May and go away. Well, if you'd done that at the beginning of May, you'd have been selling it down here at 13,000. You've lost 1,000 points by staying in the trend, staying in the trade, staying on track. And the 21 EMA daily support has provided, perfect, more or less perfect support for you there. So, have patience, have some discipline, stay the course, let your winners run, cut your losing trade short. Is a bit of a mantra of mine. Trey, I hope that's answered your question. Surin, good morning again. Can we have a look at the pound? Certainly can have a look at the pound. Sterling, same setup here, guys. 5-minute time frame. Big volatile day yesterday. Inflation came down. It's still massive. Core inflation, which has been lost. It was interesting. I was reading the papers in the UK yesterday. None of them talked about the core number actually going up. It was all the government headlines, the sort of little paper supporting the government talking about how inflation had come down. It's still huge. 8%, but Germany going into recession today has probably again captured those same paper headlines. Anyway, not interested in any of that, are we? Sterling under pressure from a stronger dollar, so we're trading at 123.48 at the moment. Big volume again there on the data, the US data. Big down candle there for sterling. This dotted line must have been these red lines on my charts are highs and lows of previous days. So it was sort of into play yesterday. Sort of came into play a wee bit today, 123.75. But it's down. But interestingly though, we're bouncing off today's low, which we had in the Asian session, the European session, and late in the European session, early US session. The low is higher than it was. Interestingly here. Yes, this is only a 5-minute chart. But it may be signs of this maybe showing some sort of resistance and perhaps starting to turn. So we'd want to break this 123.30 zone to the downside. But initially here, if you're trading this on the 5-minute, I'd like that to break that 21 moving average at 123.55.7 and then test this zone through here, 123.70. So another 20 pips to the upside if it can. Having said all that, the high of the day was actually plotted here at lunchtime when we got up to 123.85. So that's our high for today, 123.85. Sorry, it's a blue line, not a red line, and that's our low for the day, 123.30. So there's a 55 pip range on cable thus far in the live London session. New York is live now. The Forex part of New York will be live. The stock market's not live for another 30 minutes. But certainly, obviously, Forex traders trade 24 hours. When London's open, it gets very, very busy. So we're at the buy. We're biased to the low of the day where we are at the moment, 123.50. Remember, most of the data's out. There's still some speeches, quite a lot of speeches still to come today. Barkin, pending home sales later on, Collins and the Haskell from the Bank of England. So that's things that could affect this pair, but we're biased to the downside basically. So if you're trading this on the 5-minute time frame, Surin, I would I'd be still short on this even though it's turned around, but it's looking to try and push higher. If it does break that 123.55 area we just talked about, see if it tests that last previous high or low from another day around there at 123.70, and then we'd be 123.85 for the high of the day. But I say we're still biased to the downside, and the candle's quite small. So let's have a look. So we go to the higher time frame. What's the 1 hour? Well, the 1 hour is still biased down, isn't it? So you want to be looking to take short trades in the lower time frame. So there we are, the 21-hour moving average. We've been over it an hour and a half today. Can't get over it at the moment. So it's biased to the downside. Looks to me like we may be testing the lower today again at 123.30. So That's where that's biased so far today. Remember, things go low, they can go lower. They go high, they can go higher. Don't think just because they've gone up, they're going to come back down. Ravi, good afternoon. Thank you for my friend. Thank you for your very kind comments. Dapo, thank you, my friend. No problem. Good afternoon. See you. I guess you might be in. Oh, you might be in Europe, might be in Asia. I don't know. Reed Morales. Oh, you could be anywhere, couldn't you? I'm not quite sure of that logo, Reed, my friend. You got an Xness. You got an Xness. What from lips? You got an Xness logo on there. I might have to get rid of you. Anyway, hello Philippines. You're in the Philippines. So anything you want to have a look at, my friend? I'm gonna have to take your name off because you've got a competitor's broker's logo on there, and we can't possibly have that. I'm afraid it's HFM or nothing here. But anyway, where were we? Sterling. Let's have a quick run through the other pairs. Gold. I know you're all. Love to trade gold. So we've had a big down hour. 15 minutes may have found a floor today, a new floor of the day. See the big volumes again? See the last big volume spike, it rallied from there. Big volume spike, it declined. It was red, red, red. So are we going to still test this low? So the low of today is here, 90, so under 1940, interesting, 1939.20, quite significantly under 1940. 1939.20 was that low in the immediate aftermath of the data to the downside. So 1930.20, it's bounced a wee bit, but that still looks quite weak to me. 30-minute, huge down candle, still very weak. 1 hour candle, there it is. Enough said, really. So as we looked at the on the black chart, the black background chart, it was clear the zigzagginess, and we'd breached the 1850 low. It's clear. It's not so clear here. That yellow line there, you can't read it, but that says 1950. So this 1950 support area through here, as triple floor. Many people argue has been breached. Are we going to go back over it? If we go up to the daily time frame, you can see we've been moving up for March, April, and a bit of May, beginning of May, but then we topped out here at 2050. We got as high as close to 2080, but we've been down ever since. And the gold market here on an end of day basis has been short and under its 21-day exponential moving average since the 16th of May. Although the moving average is it's flattened out here towards the end of April. It peaked up a bit at the beginning of May, and now it's rolled over. That's not a strong sign either. So it's starting to angle down. Look at the angle on it now since we've moved down from this rejection of 2020, and we're 1940 level now. So a big way away from that. So we're rolling down. See how we moved up in a very sort of fractal big candle way. We've sort of stalled in a smaller candle way. So it might be some support around this level. 1950 might actually, when we look back at this in a couple of weeks' time on these daily candles, this 1950 may be a key support area, but we'll see where we go. John, good afternoon, good morning, good evening, wherever you are. Dollar yen. For John, dollar yen is here. This is the daily chart for dollar. No, it isn't. It's the 1 hour chart for dollar yen. John, I'm sure I don't know what time frame you're trading this, but it's a very strong day. Yesterday broke out away from this this range we'd been in, the 138.50 pivot area we'd been through for a few days. See this, the blue dotted line here is 138.50. So we rallied to it, breached it, but couldn't break 138.70, and that was a bit of a resistance area here, going all the way back to the 18th. Became a resistance area here this week on the 23rd. It was a resistance area yesterday, but we breached it, broke it, rallied up. So we breached 138.50, we breached 139, and we're currently trading over 139.50. So a whole big number up from that pivot area we'd had for the week. So we'd been through it, breached it, and when we breached it, we rallied away from it quite significantly. So obviously the next line in the sand, it's not very clear on this chart, but the next line in the sand is obviously the big round number at 140. 140 up here. 140 up 4. There we are. There's 140 there. So that's the next big target. If we go up to like the 4-hour time frame, you can see it's been trending, significantly since the middle of May. It's been going higher. Breached that. There's that line we were talking about before, that 138, 138.50 area. Congested around that area, came back to the moving average, then broke away from it, and here we are testing 140 to the upside in the 4-hour time frame. And the daily time frame, again, another one that's been trending and supported by the 21-day moving average from the early days of April. What can I say? There we go. Dollar remains with the upper hand against the weaker yen, particularly this divergence in policy. Obviously, the data today hasn't helped that one. But here you can see quite clearly where we are when it comes to historical levels. So we're at 2023 highs. We were last up here at over 139.50 back in November last year, and you see how we consolidated at that same level we've been talking about, 138.50 areas. It came down to it quite aggressively. So again, if we break away from this 140 area, we could move back up and even test the 150 area again. If a lot of it is in the hands of the policy coming out of the Bank of Japan. Many people have been saying the yen has been undervalued, but that clearly wasn't going on as far as the charts are concerned. Will there be a tilt away from this accommodative policy? Will the yen come back to life with the new governor? It hasn't happened yet. Let's see if he shows his hand and what is going to happen to this yield curve control as we move forward into the second half of 2023. So, John, to answer you, it's long on a daily, it's long on the 4-hour. And you guess what I'm going to say about the 1 hour, aren't you? It's long, significantly long today. But, if we get to 140, may stall there, but it's sort of struggling a wee bit today, isn't it? But, pays your money, it takes your choice. But that's trending high, my friend. Be careful to try and catch the top on that one. Okay, Surin. May wait until the news is... Well, I say the main news of the day is out, Surin. I mean, it's out. You can analyse it now. We're over 45 minutes after the main news of the day. Let me just show you. You're talking about news. I don't know when you put that question on, but the main news of the day is out. It's all chatter yet to come. We've got some pending home sales, but that's really not going to move the market like the data we've already had. Initial jobless claims, tight market again. It's come down 20,000 from 242,000, but that's been revised lower as well this week to 225,000, 229,000 this week. So the tight jobs market is back on the agenda. GDP better than expected, 4.2% and 1.3% compared to 1.1% and 4%. So it's better in the second reading than the initial reading. Not often the case, so that's significant as well. And the personal spending, consumption expenditures have ticked up as well. So all of that is adding to the argument that the Fed are far from finished raising rates, because there's still life in the US, or significant life, some would say, in the US economy. So dollar continues to accrue today. Zimba, I'm a beginner. I'm still learning candlestick patterns and how to trade with candlesticks. Great question, Zimba. There's a whole host of stuff written about candlesticks, both in books, online. Two big things to take away from candlesticks, okay? There's all sorts of different names for candlesticks. One thing I learned a long time ago is, I'm trying to demonstrate it on this chart here, is the size of the body of the candle matters. Okay, what do I mean by that? The size of the body of the candle matters. So the bigger the candle body, the big thick bit here, the more important it is. These little ones are less important. I mean, these little doji candles, as they're called, these little with no wick at all, with no body to them, it's showing there's a balance. That's what it shows you: balance, harmony. A lot of Japanese culture and history. Balance, harmony. The sellers and the buyers are in balance. Nobody's dominating. Demand isn't outstripping supply. Supply and demand are in balance. So we're not going anyway. Price action doesn't go anywhere with small candles. When you get a big candle, we get a reaction to it. So it was a big up candle, and it was taken out here, and then you get a stream of them. So you've got lots of biggish green candles. That's positive. Lots of biggish red candles. That's positive. And when I say ish, it's all relative to what's happened previously, regardless of the time frame you're trading, regardless of the asset you're trading, because all the candlestick is showing you is supply and demand, is buyers and sellers. Are we biased to the upside? Are we biased to the downside? Through here on this particular chart, doesn't matter what it is. Not there were some big candles, but mostly small candles, and the price didn't go anywhere, did it? We tried to go up, came back down. Tried to go up, went back down. Drifted lower on small candles. Big candle up, but then it was wiped out. But took 4 or 5 days for that big up candle to be retraced. But actually, that's a good example. But we didn't retrace all of it. We only took about 2/3 probably a bit more than 2/3 of it out. And what happened? The candle on the 6th day closed above that first big up candle, so that's more positive. So there was nobody wanting to move that down. It moved up, and then that was followed by a breakout of this area, and it rallied up, retraced, rallied up, retraced, rallied up, retraced, rallied up, retraced. So the move up zigzagged up. So body size of the body candle matters. The other key thing is the wick. The wick is rejection. So if you take 2 things away from today about candlesticks, the body of the candle matters. The bigger the body, the more significant it is. And the bigger the wick, which is the tail or the shadow, as the Americans call it, to the downside, the bigger the rejection. So the bigger this little thing here, the wick, the bigger the rejection. There's all sorts of other things come into it. If the body of the candle is 3 times the size of the wick, or the wick is 3 times the size of the body, there's all sorts of other things come in. But they're the 2 big things. So a big wick to the south is a rejection of lower prices. A big wick to the north is a rejection of higher prices. The bigger the body of the candle, the more significant it is. There we go. There's lots you can learn. But that's my 2 tips for today before I move on, Tim. I hope that's helped. Okay. Sabolo, when are we going to drop? I don't know. I don't know what you're talking about. I don't know what chart you're talking about. But if you're talking about the stock markets, they're already dropping. If you're talking about euro, it's already dropping. If you're talking about gold, it's already dropping. If you're talking about the dollar, who knows? But again, it's all about time frames. It's all about how long you can hold your trade for. Let me demonstrate what I mean. So here, the gold trader using this strategy would have been is short at the moment. He's taken a short trade from the 16th of May, and he's still short. He's took a sell trade there at 1988, and we're trading at whatever it is at the moment. Can't see at the moment on that chart. And he's still in his short because it hasn't reversed. It's still moving down, and it's starting to move down. So he's still short. Okay. If on the other hand, so Bello, you're trading this on the 5-minute time frame. Well, nothing's happened there. That was a big candle. Remember what I was saying about the size of the candle? That might have been a big candle, but it was 15. It was 5-10 minutes before the big news. But it was perhaps telling you something. That was the news at 30, and it followed through. So we've gone short on this. This now looks like it's given up, or it's come back. It's gone back over this moving average, but it's struggling to get over there, isn't it? So it still hasn't recovered. It's only recovered about 50% of the big down move, hasn't it? That move was 2,280 points, and we're back. And this is less than 1,000 points. So we've covered a little bit over half. Okay, so it may, but again, this is the 5-minute time frame. Not a lot going on there on the 5-minute time frame, is it? Except that was, look at the big candles. It was biased a bit long here, then it ran out of steam, and it wasn't doing anything. The moving average was flat. I'd been out of that, not interested in it. That would have caught my interest on that particular candle. Might have had a little a flutter on that, a little dip into the market because we'd created a new low for the day. So it was a big cat. See what I'm saying about the size of the candle matters? That's a big candle. That's obviously massive, isn't it? It followed through really aggressively. It bounced back. But see how the 2 big down candles, these big dominant candles on this chart, It's taken 1, 2, 3, 4, 5, 6, 7 candles just to retrace one of them. So we're still biased to the downside, aren't we? Okay, so I hope that's helped a wee bit, my friend. Right, I'm going to go. There's no more questions. I'm going to go and check the open. Unless somebody wants to stay, we'll see how NVIDIA start the session today. Because, I say, big news from them was this big positive earnings numbers early on today. So let me just let me leave you with the euro. So, what have I done there? Didn't mean to do that. Bear with me. Euro. Yeah, continuing to. Actually, it's bounced up, hasn't it? So it might be testing this area here. It's come away from the 107.13 low from earlier in the day. It's trying to push back higher. And indeed, it's here on the 5-minute chart. Looks like maybe trying to test its 21 moving average. But you can see, we're still biased to the downside here ahead of the cash open. So, any more questions, guys, before I wrap up for the day? Watch those the open of the cash market. Let's leave you with the Nasdaq. Where's the Nasdaq gone? Okay, there we are. USA 100 today, moving quite high, quite nicely, 13,932. So will we test that 14,000 level? Who knows? But we are at a key level, aren't we? We're above that high we got to here on the 18th, and we're above but Tuesday's high here at 13,000. So it's a key level where we are at the moment. Can we push on? Let's see how the cash market opens and supports this particular chart. As I say, quite overbought, and it's been overbought for quite a while. And in fact, it's been overbought all day on this particular chart. So thank you for your time, everyone. Take care, stay safe, and we'll see you all again next week. I don't think we're doing one tomorrow, but if you want to see us tomorrow, please let us know. So take care and watch that open on the US market. It could be quite spiky with some of those big tech companies in play. Take care, everyone. All the best.